over the years, Joe, the IPO markets have always indicated kind of a temperature check for the entire market. And this is going very well for these two companies. But once again, both of these companies could be said to be beneficiaries or at least somehow taking advantage of the environment we find ourselves in right now. Is it a reflection of the market being in good shape right now, or just that there's demand for these companies like a DoorDash that benefits from stay at home?
Good morning, Joe. I think it's a little bit of both, and it's all coming together, isn't it? You get in your Tesla, you drive to your Airbnb, which you use DocuSign to sign off on. You arrive there, you DoorDash in your food, and then you Zoom to do your work. So collectively, it's all coming together. But listen, Airbnb and DoorDash IPOing right here at a time where they have real strong momentum. Airbnb in particular, Joe, they totally recreated themselves, and they're seeing a lot of positive momentum as it relates to these local vacations that we're all taking right now. DoorDash, quality company, little tricky because if you look forward into 2021, exactly how much of a give backers they're going to be when there's a return to normal.
It's amazing reading that article when it first highlighted Airbnb's really quick strategy in terms of what you just described, and because it wasn't immediate. That is another thing that wasn't immediately obvious to me, that nearby rentals were going to be even more. Hotels, still big problems. Right. Obviously, I'll bet you. I guess motels along all the highways are maybe not doing as badly as the destination hotels, right, Joe? That would seem to make sense too, because we're driving. But Airbnb is certainly a beneficiary. Yeah,
certainly logical. Listen, I think you've got all these Bay Area companies that are going to be offering an IPO this week, which is fantastic. My daughter keeps telling me about Roblox. I never even knew what it was, but apparently that's going to be offering an IPO as well. So, back to your original question, Joe, this is about the sentiment that's a very strong one within the market. It's about the abundant liquidity that's being provided, but it's also about the digital transformation and the way in which we are conducting our lives, both professionally and personally.
Well, I think we all have, I guess, come to the conclusion that consumer life goes on, and it's not necessarily only a zero-sum game, but they do have some cash from not doing a lot of the other stuff, and there are going to be sectors that benefit, and these are two of them. But the overall market looks pretty healthy based on the type of interest and demand for IPOs as well. That's something you would posit, Joe?
For sure. And Becky began the show by illuminating this stellar performance within the NASDAQ that's really not talked about very much. All we keep hearing about is a rotation from growth to value. I'm not necessarily sure that I agree with that. There still is strength in all these NASDAQ names, whether it's Apple, Amazon, or Microsoft. They just look to me to be coiled springs that are going to ultimately exceed the highs that they posted in September. So I wouldn't walk away from that growth and NASDAQ orientation.
Shepard Smith here. Thanks for watching CNBC on YouTube.